Welcome to the Cashflow Academy podcast. This is where we make investing simple. We're going to have lots of fun today. I'm joined by my good friends, Corey Halliday and Noah Davidson. Gentlemen, thanks for joining.
Happy to be here.
As always. We look forward to this stuff. Go to yourinvestingclass.com for goodies. And there's free stuff there and things to learn, things to watch, and billionaire secrets and all kinds of fun stuff.
Not my investing class, your
yourinvestingclass.com. Did I say that? Did I say my investing
No,
class?
you said your. I was just
Who's
pointing
on
out.
first?
Yeah. What's on second?
I don't know. No, he's on third. Oh, that's bad. Speaking of bad, what do you say?
Why'd you look at me when you say speaking of bad?
No, you were defining. I didn't mean that. You were defining. Trying to find the difference between an idiom and a colloquialism.
And we're talking about like...
I struggle to say the word colloquial. Colloquial. You kind of go into it now, but colloquial. I can't say the word. What's
Nailed
the difference?
Stock market sayings? I don't know. An idiom is a group of words like raining cats and dogs.
Yeah, so we're going to do... we thought it would be fun to just do a bunch of wisdom that comes out there, because when things become a saying, a penny saved is a penny earned. Well, that's not true anymore, but
yeah.
But it used to be, and so it sticks. It's a saying because it's a saying. So we're gonna go around the table and have a little fun today, maybe a little less serious, but yet a lot of wisdom. We're gonna see how many of these we can come up with off the cuff. With little to no preparation.
Yeah. There was no preparation whatsoever.
Yeah, Corey says, let's come up with all of our sayings.
Stock market sayings.
Stock market sayings. Okay.
So what's our format? Are we gonna take turns going
know.
around?
I think it's just
are we gonna comment on the
shotgun.
wisdom? Actually talk about that?
I have no idea.
We're just making stuff up as we go.
Yeah, absolutely.
Classic.
Let's make.
This is gonna go great.
This is gonna be the #1 rated podcast we have ever done. I promise.
Actually, it's the one where we got canceled. That's what it's gonna go down in history as.
That'll take me good 10 minutes.
Depends on how many sayings we go. All right. Who wants to throw out a saying?
All right. I'll start with the trend is your friend.
All right, the trend. Do you know who said it, or is that just? I have no idea who said it.
I don't know, but I've always found that to be better advice for traders than investors.
Whoever it was a technical analyst.
Yes, they were a technician. They were a chartist.
Yes, for sure. But no, the trend is your friend, because when you get into a trending market, especially like the one we've had recently, that's really tough to beat on short-term time frame, any sort of day trading, position trading, holding for that trend. Now, the challenge with that is sometimes the friend will turn around and stab you in the back if you're not careful.
Yeah.
Well,
so you got to know how to
have
spot,
your exit strategy.
have an exit strategy, know how to define the end of a trend. But a trending market is awesome when they come around.
That's what the whole idea is. There's another one called "Don't Fight the Fed." And the idea is to go with the flow. So there's three of them.
Right there.
Yeah. Go with the flow. Don't fight the Fed. The trend is your friend. Let things come to you. Take what the defense gives you.
There you go.
Right. And so, if you're a trader, I remember Red Anderson, who was one of the first guys he was kind of we all start out as sales guys selling software, and then we have to learn how to trade later, right?
Right.
Yeah.
Pretty much.
And he was in that camp, and he said, the trend is your friend. We talked about shorting a stock in a broad market that's going up and how dumb that could be, how that's like a recipe.
That's like swimming upstream. That is.
Yeah, even if it's... then you'll be up a creek without a paddle.
Exactly.
The ratings are dropping, man. It's like,
nope, they're going up, I promise.
The humor.
This is the content they come for.
Someone's going to type a comment, well, at least these guys think they're funny, Anyway, we could laugh at our own dad jokes. But Rhett said, he said, hey, you want to lose money faster in any way. Find a fundamentally weak thing and figure that you can beat a trend. And the detachment between fundamentals and technicals is often significant.
Yeah,
it's a material detachment often. And so if you're going to be a trader, the trend
is your friend.
Is your friend.
La
All right.
tendencia es su
On the
amigo.
investing side,
Nice.
it's okay to kind of go against the trend, I feel like, because, that's a Warren Buffett adage. That's another one. Buy when others are fearful,
you mean
sell
like-
when
So
others
that's
are greedy.
that's my favorite.
All right.
All right.
Now, that's an investing philosophy.
Contrarian
Yep.
idea, and I love that. In fact, I have that. Oh, I'm coughing.
He's getting
When I
emotional
laugh,
just thinking about it.
Yeah, when I laugh, I cough. So I actually have that one on my wall.
Yeah.
And he said, I will tell you how to become rich. I can give you the whole saying. I can tell you how to become rich, close the doors, be fearful when people are greedy, and be greedy when people are fearful, which is almost contrast to going with the
trend,
flow. And,
yeah.
But to me, they're on sale. I think that, that summation by Buffett actually is it's hard to understate it or overstate it.
Yeah.
Because it really is how things are bought. Last time we got together, we went through the letter, and he said that we're getting kind of big when you control 5% of everything. It's hard to move that much money into the next thing that's going to double, right? You're not going to find what Peter Lynch called the 10-bagger.
That's right. That's right.
What Peter Lynch,
10-bagger, is that a golf? Is that a bowling term? What is that?
isn't it 1,000%?
Yeah.
Yeah.
10-bagger is 10x. So you're not going to find that 10-bagger, but except he kind of left himself a little room, and he called it the shooting the fish in a barrel experience,
Yeah.
right?
You need the market to essentially cooperate with you finding a 10-bagger. And the only way you're going to do that, like he said, all of these major corporations have been picked over by them and by everyone else. Yeah. So the idea that they're going to find a major corporation that's just going to explode in value, that's very difficult to do unless the market gives you that opportunity. And so they're sort of two different philosophies, but I think they apply to two different sets of people. Yeah. When you're trading, it's important to go with the trend. When you're a long-term investor, that's when the best opportunities are, in fact, when you're in a violent, vicious downturn. And that's where you can do your real buying and make a meaningful difference.
So let's talk about what Bogle said about, okay, so you're saying he's not going to find the needle in the haystack?
That's right. So buy the whole haystack.
So say that you got it.
Yeah. Yeah.
So what's the whole saying together?
Well, he said, quit looking for the needle in the haystack, just buy the whole haystack.
Okay, now that could mean a lot of different stuff. I think you could take that. I think, let's not put words in Bogle's mouth. I think what he was talking about was he was a big fan of diversification.
Of indexes, yeah.
And let's talk about this. When we have all read Warren Buffett's stuff a lot. Like you read his stuff, and there is a line when he speaks. And he speaks to uneducated investors, basically people who he refers to as who don't know how to analyze a business, fundamental analysts. And then he speaks to people who do know how to analyze a business.
Yep.
And he says, for those who know how to analyze a business to a good degree, they have fundamental analyst skills. He said it's madness to diversify.
Yeah.
He says to take your list from 1 to 50 and your list of attractiveness and put money on all 50 instead of concentrating on number 1, 2, 3, 4. He says that strikes me and Charlie as madness, is what he says. But he says, and then he goes over the line of the uneducated investor. He says, but if you can't do it, then, if all you're trying to do is not get killed relative to the market, well, diversification will do it. So when Bogle says buy the whole haystack, does he mean diversify, or could he possibly mean, what I would agree with more is, play Monopoly? You land on it, you buy it. You land on it, you buy it. And because Buffett's kind of there in that, he owns 5% of everything now. I mean, he owns 5% of the S&P 500 of dollars and earning power and production. He just owns the whole dang thing, and in that sense, he does own the whole haystack. So what do you think it is? Do you think he's talking about? I think he's talking about diversification, but I'd rather interpret as monopoly,
Yeah.
buy everything.
Yeah, and he was a big fan of index. I mean, that's Vanguard. He's the founder of Vanguard, and they're known for their index funds and their lower expense ratios and all of that.
Yeah, cue Noah on fees.
Yeah.
Fees.
But his business...
Well, I mean, he is selling mutual funds, right?
He is.
Yeah.
And his business relied on people buying those index funds, and then he would collect a little fee. Now, he was great in that he brought fees in the entire industry way down.
Way down.
So give him credit where credit's due. But
way down
by leaving
out,
Vanguard,
by making more of them.
Even
Yes.
even after he left Vanguard,
Yeah.
he became even more. When he left the company he founded, he became almost like an Old Testament prophet out there saying, don't pay fees.
Yeah, and so his advice for most people, and it's really to the uneducated, is look, you don't know how to do a fundamental analysis, so you should just be diversified in the S&P 500.
Yeah.
Don't try to find the needle in the haystack. Just buy the whole index, and now you're going to participate with the market. And I think that's his advice. But like you said, Warren Buffett would say, if you know what you're doing, it's madness to diversify all of your capital away when you can concentrate on these very best ideas. And if you look at Warren Buffett's, the reason that he's vastly outperformed the markets for decades and decades has been he didn't diversify. He found the best fundamental opportunities and focused on those.
And he bought when people were selling.
When they were fearful.
Right. He bought when they were fearful. So those two work together. I'll tell you, diversification is an admission of ignorance, and it requires absolutely zero intelligence to do whatever the market's going to do anyway, to take what the market gives you. And the fact of the matter is Wall Street takes that approach most of the time as they collect their fees.
Yeah.
So, which brings us to Wall Street is the only place where people, people in a Rolls Royce take advice from the people that took the subway?
That's right.
Is that what it was?
I believe that is it.
I probably butchered that saying, but that was Warren Buffett as well. So
I like that.
the bulls go up the stairs and the bears jump out the window.
Especially if they get a margin call.
Literally.
Yeah, I originally heard that as the bulls take the stairs, the bears take the escalator or something like that. But I'm like, I heard the window.
Might have been Kiyosaki
stairs up,
that did
elevator
the window.
down, different
concepts. Down's fast, up slow, which is true because I think fear is more powerful than greed. But the fear is punctuated by greed because the bears can sell high, adding liquidity to the market, driving prices down, and they can buy low. So when you find when the market sentiment is turned truly fearful, there's an opportunity there to make money quickly, but you have to know what you're doing. You have to know how to offset the risk because when markets go down fast, they also rip up fast short term. So as a technician, you can watch things kind of grind up slowly. They typically slow down first. Nobody wants to admit that it's too expensive. And then eventually it'll come down quick. And it takes a real quick turn and then it kind of bounces back up. It's like, are we still doing this?
To your point, did you know that the top 10, if you went through the top 10 strongest days in the stock market, they all happen in bear markets?
In bear market, yep.
Because it's that violent, you crash down, but then you spike back up and then you kind of crash again and that sort of thing. So if you go back, it's a who's who of like 1987 and 2008 and the global financial crisis. You go back to the Depression and some of those periods of time. So the top 10 days for the market to go up are actually and that's because of volatility, right? Volatility goes up.
Bears
when
buying
stocks are
to cover
going
their
down.
positions because if they sell to open and then the market reverses on them, they have to buy to cover, and it can drive the markets up really, really fast, especially when you get a bunch of short sellers all trying to do the same thing at the same time. And then some investor comes in with a lot of money and says, this looks like a good price to buy. And then they buy, and they can cause a
some
floor,
stabilization.
and then it forces the bears to buy to cover. And so it's really fascinating to watch a market. Like I've watched several bear markets play out over the years, and they're exciting. They are violent. They are not for beginners, and if in doubt, sit it out. That's a good market saying for you.
There you go.
But if you get used to learning how to gauge these things, and that's what we teach at the Cashflow Academy, you start to understand that volatility, now that we can recognize and measure what's happening, we know that ramps up in a bearish market environment. So that's great for downside trades to trade with the trend to the downside. It's great for the investor that wants to put some money to work to do that in a bear market, because that's where you're getting those great prices. But you have to know you have to have enough knowledge to know what environment you're in.
It is so important. This is why the 4 pillars means a lot, is there is a distinction and there's a separation between the first and second pillar. And it always has to be in your mind. The segregation of those two ideas is really important, because what we've been talking about really is emotional volatility, that the markets are going up and down, or prices going because of emotional volatility. That is 100% technical. But if you look at bears going out the window and bulls going up the stairs, if you shift in a fundamental mindset of that, everything in life is that way. I was downtown once, and one of the famous pastors of our community he's a famous guy, and he walks up next to me. And I'm like, oh my gosh, here he is. And he goes, and there's a demolition going on. They're tearing down this thing. He goes, and thus we see that it is much easier to tear down than to build up. And then he walked across the street, and I'm like, okay. But if you think about how long does it take to build a house as opposed to how long it takes to burn it down? How long does it take to build an airplane as fast as it can be to crash it? I mean, everything that is constructed takes longer. So if you look at a company like Enron, it takes a long time to build that up. It takes a very short time to lie on a fundamentals.
Oh, yeah.
Kill your
I once went
company.
to a baseball game at Enron Field. And then I went back a year later, and it was IRS Stadium. It was really weird transition. But
And you weren't sure which one was more fraudulent?
Yeah. Well, and isn't that the old saying? It's like I love that. When the company is bought the ballpark, that's a good time to short.
Yeah. Oh, yeah. When they start naming rights.
Yep.
It's like Crypto Arena or whatever, and then Bitcoin crashed immediately after.
Unbelievable.
You could probably name about 100 of those, right?
So there is I think the emotions. Can we have who was it? Irrational exuberance. The guy at Yale.
Oh, that was Greenspan.
Yeah. Well, but wasn't it the guy at Yale, and then Greenspan took it from him, or did he take Greenspan and then he wrote the book? It's the guy who does multiple.com. It's the guy who does the...
I'm not sure, but Greenspan made it famous. But what's interesting about that is they say that Greenspan gets credit for the irrational exuberance call, but it was in 1995. The NASDAQ... Well, the NASDAQ went... I think it went up about 200 or 300% from when he said it.
Yeah.
And so it wasn't a good call by Greenspan at all.
Yeah.
Like, we went massively higher after he called it irrational exuberance.
Now, I'm so upset that I can't, the guy who wrote the book, multiple.com, he's the guy that has the adjusted PE.
Schiller.
Thank you. Now I get to turn my phone.
You just got to put it in the
right
context.
Yeah, adjusted PE, and then
Schiller.
we understood. But Robert Schiller.
Robert Schiller.
Didn't he win a Nobel Prize in economics?
Yeah, I think so.
Might have.
If he didn't,
I'll tell you though.
We'll just give him an honorary one.
Yeah, but winning a Nobel Prize in economics, it's funny. I wish there was we got to come up with this saying for academia, because I'll tell you what, Robert Kiyosaki had that in the title. He goes, why C students work for A students and B students work for the government.
Yeah.
Right?
Yes.
Yeah. And so...
makes us feel good if we're C students.
Yeah, because you look at with Black-Scholes, right? So there's a Nobel Prize. So where do they go to work at?
You know who I feel bad for?
Long-term capital management. That's like one of the worst.
Stories.
Think about that. We
Yeah.
could go with ironies, like Social Security. How about long-term capital management, where they're skimming
Little
the
tiny
short-term
profits.
spread.
Yeah.
Long-term capital management skimming the short-term spread with the guys that invented the options thing. Nobel Prize? Okay, Nobel Prize.
Yeah.
We love to put square hats on and hang a thingy off it so we can look smart.
Yeah.
Hanging on the wall.
Look how smart I look.
Yeah.
I got a square hat on with a thingy a tassel. And watch this. I'll switch it over now. I've achieved something.
Now you're part of the club.
Oh, yeah, exactly, man. It kills me.
I'm picturing Rodney Dangerfield with his tassel and everything. What was that movie?
Back to School.
Back to School.
Marcy and I, we will, before we go to bed, we'll throw a phone open and, we'll watch some YouTube shorts or something. You know, people that are dumb, you know, they make a lot of noise. And if you say something that is galactically stupid, to use Tom Cruise's phrase, it's going to get out there. And sometimes she's like, we just got to move to the forest. I go, actually, this gives me a tremendous amount of hope, because if these guys are surviving the world, we're going to crush this life. So anyway, all right, give me another one. What do you got?
Let's see here.
How about buy the rumor, sell the news?
Buy on the rumor. That's the whisper. Buy on the rumor, sell on the news. Define that.
So I think that means that a lot of the information is already out there before you catch wind of it. In other words, a lot of times what the general public will do is some news comes out that, oh, the Fed just cut rates. Oh, well, I got to go and buy because rate cuts are good. But the market has already figured out that the Fed is going to cut rates at this next meeting. And so they're already pricing that in ahead of time.
So
right?
what you're saying is I need to get on a committee on Congress.
Yes.
Yeah.
Yes. See, that's
that's
truly
well.
buy
Now
the rumor.
That's the insider.
No, hold on.
That's the ultimate insider.
Create the rumor.
Yeah, create the rumor.
Create the rumor.
Yeah.
Yeah. Then you buy, get people to buy
Who
it.
are the best investors of the world?
Yes.
They're all in Congress. It's
Create
amazing.
Their ability to beat the market is
It's unmatched.
unreal. I follow it. It's fantastic.
How about create the rumor and reinterpret the news? We're not in a recession. Well, let's talk about what a recession truly is.
Spin.
Right?
Let's move the goalpost.
Yeah, it's crazy. Let's redefine words.
The way I like to look at that buy the rumor, sell the news is to think about, the way I think about it is it a known unknown or an unknown unknown? So a known unknown happens all the time. Like this company's going to report earnings on Wednesday at 5:00, but we don't know what the numbers are going to be. That's a known
Unless
unknown.
you're Martha Stewart.
Right. Yeah.
Then you know what the numbers are going to be. Did you see that guy recently who got caught by the SEC because he was listening in to Zoom calls? His wife was on Zoom calls.
What?
And guess what the company was? Your favorite, BP.
Oh,
that's fantastic.
broken pipe.
Yeah, it's your favorite company.
Broken
And it was
pipe.
actually, they were going to buy out a company, and he was listening into his wife's. She was dealing with the merger and acquisition
So he's
area.
got an ear to the wall.
He heard the rumor.
So he made $1 million, whatever, of course, illegally.
And they caught him.
It happens all the time.
Well, she turned him in,
she
which
turned
I
him
thought
in?
was fantastic.
It happens all the time. I had a guy call me one time, and he was in a bunch of masterminds and stuff. And, he says, hey, I was talking to the CEO, and he said, earnings are going to be rough. And he says, anyway, I says, dude, the very fact he said that to you, if you go short that, you're dead. Don't even think that way.
Yeah.
But how about this?
How
about this one? Here's one that's outdated. Honesty is the best policy.
Yeah. It'll keep
How
you
about
out of
that one for
how
a
about
minute?
how about stay out of prison?
Yeah.
Your life's going to be much better outside of prison than in, most likely.
Do you guys remember the story about the pizza boy, the delivery boy, who was delivering pizzas to some corporation in the wee hours of the night? And he heard the rumor, and he went home and he called his stockbroker brother-in-law, and they made a killing. The stockbroker brother-in-law went to jail, but the pizza boy did not.
Bang.
So I can't remember what book I read that in, but it was a good
Depends
little
on
story.
who you're delivering pizzas to.
Well,
I guess.
this proves what is known in the stock market as the greater fool theory. Clearly, if you want to buy something low and sell something high, you got to find somebody willing to take it off your hands.
That's why Buffett. That's why Buffett hates Bitcoin, because the only way you can sell it is if someone will pay more for it than you did. That's the only way to make money in it.
Well, it works until it doesn't.
And he hates gold for the same reason, right? Because it's not a productive asset. And he talks about farmland. Well, with a farm, I have a crop. I can generate revenue and earnings and all these sorts of things.
Business. I can generate rent.
Yeah. But with gold and with Bitcoin, he hates them because there is no underlying business. It's just a price that someone's willing to pay for this.
He makes a good point, because people want to hedge. And I have gold. I'm a chicken.
Yeah.
The only reason you buy gold is fear. And I have enough fear to buy some gold. I'm a chicken, right? Bok, bok, bok.
Yep.
I'm a chicken hawk.
Why'd the chicken cross the road? But the fact of the matter is Buffett's pretty smart, because if all hell broke loose, who still has the power, whether you're in good times or bad times. It's the producer always has the power. Why?
Yeah.
Because there are necessities of life: food, clothing, shelter, and an iPhone. You must have communication.
Yep.
You must have medicine. And so if you're the producer of those things, you always have the leverage. You always have the posture. You always have the upper hand living your life as a producer as opposed to consumer. And I think that fact in his mind supersedes the greater fool theory any day. The way he said it was, he said, if you gave me 1% of all the real estate, I give you $25 billion for it right now because it produces housing.
Yep.
He says, if you give me 1% of all the stocks, I give you $25 billion or whatever, right now. He says, if you gave me all the Bitcoin, I wouldn't give you all the Bitcoin, I wouldn't give you $25
Okay,
for it.
while we're talking Bitcoin, let's throw out a few other classic idioms or colloquialisms.
Hang on, I'm going to learn to say it before the end of this podcast. Colloquial.
It's like
is that close?
I have no idea.
Colloquial. Or you're not even
I think there's a Q in there.
You're not even going to attempt it?
Colloquial.
All right,
Colloquial.
here's the saying. Ready? Hodl.
Huh?
Hodl.
Hodl.
I've heard that one.
HODL. Hodl.
Yep.
Hold on for dear life.
Oh, okay.
Which I actually don't mind
Which I
that
attribute
advice.
to some crypto
if
bro
what
somewhere.
what you're holding you fundamentally can value and et cetera, I think that hodl, I think people get out too easy.
Diamond hands.
I like Warren Buffett. Don't lose money.
Yeah.
That's a good one.
Yeah.
I like that one too. Don't lose money.
That's rule number one. Phil Town wrote a book. Phil Town is a guy I know a little bit. We've spoken on a couple of stages together. And he wrote a whole book on don't lose money.
Yeah. Rule number one.
Well, I mean, you think about the compounding aspect. Like if you draw your account down 10%, what do you have to get back up?
20.
Yeah. So if you draw your account down 50%, you got to get 100% return to get back to break even. So mitigating that downside risk, I think that's probably one of the best things. What's the number one rule according to Warren Buffett? Don't lose money.
Don't lose money because it's just too hard to. It can be hard to recover. And he talked a lot about that in his letter this last time, actually said our partners can absolutely expect that we are not going to put big money at risk.
So what you're saying is if you want to shoot fish in a barrel, you got to keep your powder dry.
Nice. Yeah, and he has, and he does.
Yep.
And this is one of your favorites, there are old traders, or is it bold or old first?
There are old traders, and there are bold traders,
but there are no old bold traders. What does that mean?
Don't over position size, and
Don't
have risk management in place, because the temptation, particularly with short-term gains, is they can be incredibly seductive. Yeah. And there's another saying on Wall Street that kind of goes along with that. It's bulls profit, bears profit, pigs get slaughtered.
Yeah.
So when you're trying to get rich quick, the temptation is to use leverage. Mm-hmm. And if you want to be bold, well, the simplest thing you can do is buy out of the money long calls, and then hope and pray that the market goes up. And if you do that, you can get rich. But the
lottery tickets.
Yeah, it's like a lottery ticket.
Yeah.
But it is that comes back to position and discipline. And so you got to have good money management, good risk management. And one of the best ways to keep emotions out of the game for traders is just to have a position size that doesn't make your heart rate rise.
Yep.
And then you can add to winners. Like when you get something that's winning and you have it gives you a little bit of cushion, you can add to that. But going all in when you don't know what the hand you're going to be dealt is, just based off of whether it's a pattern or a trend or a news or a rumor, whatever it is, you got to think about, well, what if this goes
south,
wrong?
Yeah.
That's a danger of getting out of the rat race.
Yes.
Because getting out of the rat race is about a number, right? It's a freedom number. Yeah. It's passive income exceeding expenses. So because there's that target number or replacement of income, however you want to say it, right? I want to replace my job money or I want passive income above my expenses. Either way, whether you're trying to replace the income number or meet the expense number, it's the same target. Yeah. And so what happens is people will begin to position size to a reward. and they become bold.
Yeah.
Right.
Yes,
Yeah.
reward is probably the biggest challenge because I can tell you in my own personal experience where I have made the dumbest decisions in my own trading and lost the most money is when I had a specific financial target I had to hit.
Yeah, and that's where you and when you go bold, then you often, people. I've never had one of these, but I can in my mind I can imagine what it's like. Is when you have a margin call. You've been too bold, and now you're forced to sell what you
they
like.
liquidate you. Yeah,
You have to sell the things you like at a loss or before your options are there, and you have to do that to cover what you didn't like.
Yes.
Yeah.
Which brings me to a saying I have. This is not a saying that you'll find on Wiki Quote because I'm not a quotable guy, but there's little quotes I give my kids, as father, and one of them that I've drilled into their heads is always be bigger than your money.
yeah,
And that I wouldn't mind if more people knew that.
Always
be bigger than your money. I'll
and
tell you
tenor.
what I have seen.
I love that quote.
It's true.
What I have seen and what that means is to never let the money rule you. Always, be in the boxing ring. If all of a sudden the money is bigger than you in the boxing ring, it will beat the heck out of you.
Yep.
You have to remain bigger and stronger. And that is in everything. I have, if you see, like I've hung out with a lot of rich guys and I've come into contact with a lot of rich guys. And one of the things I think was beautiful about Buffett and Munger, the late Charlie Munger, those guys are so big as people because their money pile is enormous and they've somehow remained bigger than that.
Yep.
In terms of character. In other words, as your money grows, if your personal development does not keep pace with that, you're in trouble.
Yeah.
You are in serious trouble.
Well, there's a saying that money makes you more of what you already are.
Yeah.
Yeah.
Which if you have to be very mindful of that. Your personality and the things that you're susceptible to, money is like pouring gasoline on the fire.
Yeah.
And so keeping that, staying above it, both in the way that you act, the way that you treat others, the way that, your level of conceit and all of those things. I mean, it shouldn't, hopefully you stay above that.
I know a guy, I knew him briefly because he wound up going to prison. And when I met him, I was in awe. I thought he was fantastic. I mean, the dude had me hypnotized because he just seemed like such a good, solid guy. He wound up stealing or for defrauding people of over $100 million. He's in jail now. But what happened is I don't think he started out that way. Maybe he did. I can't read his mind. I don't know. Maybe he's just shy from the beginning. But he was unable, I think, to go to his investors and say, look, you gave me some money to invest and I lost it.
Yeah.
That takes a big guy to be able to just do that when the problem's small because it can be really rough. Because he wasn't big enough.
Yeah, too much
do
pride.
that.
Too much pride. And
It wasn't big enough to just go to the investor and say, look, I told you that there was risk. This risk was brought to bear. I screwed up, or the market did things beyond my, whatever you want to say, be bigger than your money. When you invest, be bigger than your money.
and I wonder,
be bigger than the money.
And I think a lot of the Ponzi schemes and things are that. They're an inability for people to accept that there are little failures and things that happen, and they've made promises that they can't keep, and all of a sudden they start to try to, it's like I tell my kids, I mean, you cannot defend a lie because eventually that lie will get out, and then you're caught lying,
and
then it's much worse than if you just confess in the first place.
To thine own self be true.
Yeah.
Then thou can't be false to any man.
That's right.
You got to be true to yourself.
For sure.
So I've tried to encourage my sons to do that.
Yeah.
It's so funny. The parents, well, we're bigger than they are. We provide the food, and we don't have anyone telling us what to do anymore, so we figure we're smart. We're all stupid.
Oh, yeah.
And I tell my sons, I go, just understand your dad is stupid. Your generation is going to be smarter because I'm pretty sure that our generation is smarter and knows more than what happened in 1720.
Well, I'm pretty sure the previous
Right.
generations were smarter than all of us right now.
Yeah.
I mean, there's some wisdom of the ages there.
There you go. Okay, well, it's true. There's Benjamin Franklin things, but a penny saved is a penny earned. No, it isn't, because back then a penny was made of copper. Back then a dollar was made of a derivative of gold. A penny saved now is a penny lost.
Yeah, is a penny that's deteriorating in value.
A penny, because a penny no longer, because they changed what a penny was.
Yeah.
So when he said that, a penny saved was a penny earned because it was worth something.
But a nickel actually is worth more than 5 cents because of the base metal inside of it. Same with a quarter. A quarter is worth something like 38 cents because
Is it still though?
Yeah, the raw material.
I thought they screwed those.
Oh, they
up.
did, but still
Does it it still costs
it's,
more to make a quarter than to have a quarter?
Yes, it does, absolutely.
I think they're going to
So
get rid
I
of
can't remember where I read it. It was
Maybe.
it's one of the books you and I were studying. You gave me the name
One of the 10 zillion.
Yeah,
books
and he's like, he calls the Federal Reserve and he orders a pallet full of nickels, some ridiculous amount of nickels, and they're like, why do you want all these nickels? He's like, I just like nickels. And he was a value stored in the raw material is what he wanted. So it's an interesting thought. Money. It is an interesting. It's just if people understood money better.
I mean, I'm still trying to understand it. It's a medium exchange. It's a store of value. Everyone that writes a book on money, how come I can't remember everybody's name? Am I getting old and senile? I can't remember his name.
Yes.
There's too many sayings.
But whenever someone writes a book on money, they're like, "What is money?
What is money?"
Yeah.
All like Edward Griffin, "What is money?" Right? All these guys, "What is money?" And everyone's arguing. The Bitcoin guys are trying to argue, "What is money?"
Yeah.
The hardest thing with Bitcoin is it's dependent on electricity. If you eliminate electricity, you've just eliminated the money. Right.
Yeah, it'll be interesting.
Gold does not consume anything. Bitcoin is a consumption of energy.
Yeah, and there's only a set amount of Bitcoin. So what happens when all the Bitcoin has been mined?
Well, that's why you buy one.
But don't they have?
But it's only owned by a small percentage of the world. So what happens at that point in time?
On the one hand, you have this scarcity where now it's worth $1 zillion because you buy, like the big sales pitch, the most effective sales pitch I've ever heard with Bitcoin is buy one because there's less Bitcoins than there are millionaires.
Yeah.
And there can be a day where a millionaire can't buy one. And so that scarcity gets you going. But also, if it's so scarce, you got, 7 billion people trying to work with fractions of this little tiny thing. It is interesting.
It's going to be it's going to be
Bitcoin
interesting.
People are going to read this.
Yeah.
I mean,
read the comments.
Okay, here's one by Steve.
I'm not saying it's good, bad, or ugly. I'm just opening up questions of how does this end when Bitcoin has all been mined? Then what's the next phase?
Someone will say look, they're going to build a MetaMask trap. Come on. Look, it's like we still have hypertext transfer protocol. That's probably going to be the standard for a long, long time. But Netscape is gone, dude. It was the first one it's gone.
Yeah.
So Bitcoin says, we're going to use blockchain. That's the standard. That's the protocol.
Technology.
Well, yeah, but then you're going to have other stuff. But yeah, I don't know. This is not a saying. It's a quote, but I think we can throw it in. It's one of my favorites of all time because when he said it and when I watched the video, it's Steve Jobs. The irony was just incredible. You drop out of Stanford. You say, you guys are not worth my time. You are wasting my time. I'm leaving you because what you're doing here is a complete waste of my time. I don't have time to listen to you people. I got stuff to do. And he's the guy they invite back to do the commencement speech. I mean, the irony of that just blows my mind.
Yeah.
And he said these words, and when he said it, it just penetrated my being. He said, "Don't be trapped by dogma."
Yeah.
And what that is when someone with authority or someone with position says, this is how it is, and they clasp to it and they hold on to it with white knuckles. And that's a real danger for investors, is if you become dogmatic and you can't look at both sides of a coin. I often say this, if you can't poke holes in your asset class, you don't understand your asset class.
Yeah, for sure.
In other words, if I'm going to say, business is better than this, or Bitcoin's better than gold, or gold's better than real estate, or real estate's better than stocks, or stocks are better than... If you can't say, look, I'm going to show you the problems with my asset class, then you probably really don't understand the risks that are there. Because there is a flaw, there are pitfalls, there are hurdles, there are problems with dangers, risks, with every asset class. None of them are perfect. None of them are just, they all require education. All of them do.
100%.
Well, you can't understand the risk without that. And without the risk, there is no reward. But you have to absolutely be bigger than your money and understand that risk.
Thank you for quoting that. I want to perpetuate that.
Andy Tanner.
No, don't quote. Let's just say, you know what? We should attribute it to somebody else, then it could take off.
Yeah.
If they say, who said that? Andy Tanner, like, what? We'll cross that off the list. You better say this. Where does it say that? It's in the Old Testament somewhere.
Yeah.
Probably is.
It sounds like
probably
something that could be in there. Yeah.
Yeah. There's a lot of good stuff in there, like in Deuteronomy. It
Andrew,
says,
chapter 5,
there you go.
verse 3.
Oh, let's not. Now the lightning bolts are coming.
Andrew, chapter
Deuteronomy. What does it say? Or is it? I don't know if it's Deuteronomy. I don't know my Bible that well. My people perish for lack of knowledge. My people perish for lack of knowledge.
I like that.
So, ignorance is bliss.
Ignorance is bliss.
No, it is.
Ignorance creates a lot of problems.
It does, for sure. All right. Well, I don't know that we could probably do several.
We could go on all day, and I really have no place to be.
We haven't even gotten to the dad jokes yet.
Oh, jeez.
I thought those were implied, always just incorporated.
They're just miserable. Okay, my poor sons. They love your humor though.
Well, that's good.
Like every once in a while, someone has a really good liner. They're like, that's no Davidson quality right there.
See, my kid just says that's a dad joke. He just calls them out like, good dad joke, Dad.
Hey, there's when a saying is usually a saying because there's some wisdom to it, right? And we don't want to be dogmatic with it, but it's fun to be in a group of people where the language is familiar. We appreciate everyone hanging out, and maybe some of these are sayings that you've heard. Maybe some of them are new. There's a load more we could do, I'm sure.
Yeah, for sure.
What a great idea, Corey. What are your favorite? Your favorite?
I got us canceled.
Yeah, yeah. I'm pretty sure
it was my idea.
Just by the Bitcoin bros. That's it. They're all bad.
Yeah, I need to be bigger than my mouth. The problem with all of our politicians right now is it goes in here and just comes out. That's a risk on a podcast too,
For sure.
And then if you're dumb enough not to edit those things, then you're really in trouble, right? Luckily, we don't have to edit much. Who of the three of us, who gets edited the most? I wonder who that was.
It's one of you two.
That is a title I will buy for.
All right. Well, drop by yourinvestingclass.com. And I think, Noah, I always forget we're supposed to introduce ourselves each time because we have new listeners. So, we forgot to do that this time. So catch the next episode if you want to find out who we are. Rewind one and find, at some point, that's how we get people watched. At some point, who are these people?
Yeah.
This is not the podcast you're looking for. It is.
So go to yourinvestingclass.com. Check us out. We like to make investing fun, simple, and real. Fun is in the eye of the beholder, I suppose. But be bigger in your money. A penny saved is a penny earned. The trend is your friend. Ask not what you could do for your country or what your country can do for you, but what you can do for your country.
That's right.
Good sayings, good quotes. I hope you enjoyed our conversation. We'll see you next time.
This podcast is a presentation of Rich Dad Media Network.